Hello everybody, my name's Abul. Welcome back to CRTV, powered by City Realtor. Today I want to discuss something that's on everybody's mind at the moment. Why are mortgage lenders pulling their products right now? Before we continue, I should probably say this is not financial advice. You should probably get that from a paid professional. Also, I am not a mortgage advisor. This is just things I happen to know and things that I research because I'm in the industry. To start off, I think it would be good to explain a little about how mortgages work. Now, you might go to a bank or a lender to borrow money, let's say. Majority of the properties owned in the UK are actually owned using a mortgage. Now, to get a mortgage, which means to borrow money, you will go to a bank or a lender, as you might say. Now, although they may give you a 25 or a 35-year term, your fixed rate term might only be 2, 3, 5, or even 10 years maybe. The reason for that is the banks actually have to borrow that money from other banks, which they call the swap market, and they borrow at swap rates. That swap market is affected directly by the Bank of England base rate. Therefore, if the base rate goes up or down, the banks adjust their products to suit. Also, the fixed rate for those swap market borrowings are actually sometimes shorter than whatever you may have agreed with the bank, which actually makes it riskier for the banks. This is why when the banks see a potential risk of the base rate going up, they raise their own rates high enough to ensure that they are not lending out at a lower rate than what they are borrowing. Ultimately, the banks are a business, you have to remember. Now, what's happened to many of you is that you may have gone and seen a property that you like, offered on it, and then gone to get a mortgage. Now, you may have been offered a certain rate, and then before being offered the full mortgage, they may have pulled the product on you. Now, it takes a long time between when you've seen a property and when you actually end up completing. And in that time, so many things can happen. I've seen rates go up 2 or 3 times in the middle of a sale. Now, what that means is the bank now feels it's too risky to give you that rate that they originally gave you. So what they may do is pull all their products and then readjust all the rates to suit the market and then come back on the market. So that's what it means to pull products. It's not necessarily the end of the world. It can actually happen the other way around as well. If the Bank of England base rate drops, then they may pull all their products again and reissue new ones. But you'll probably be happy they did that to you if that happens. Now, you might be asking, why are the rates going up so much at the moment? The quick answer is that inflation is at a rate that is too high at the moment. And this is one of the ways to tackle that situation. I don't want to go into it too much because I'll probably need a whole other video to explain why inflation is so high at the moment. The government's to blame for a lot of it. Anyway, I hope that was a quick and easy explanation of why so many products are being pulled at the moment. And I'll see you on the next one.